Hello, this is Dean Malone with Compass FX. I hope you're doing well today and you get some good trades. Let's talk about bids and offers in the market. A bid, also known as a buy limit, is where buyers in the marketplace are willing to pay to enter the market. Now, offers, on the other hand, are ask price, where sellers, they're looking at the minimum price they're willing to accept to get into the market. And those are known as sell limits. Now, buy limits are generally below where current market is. Sell limits, on the other hand, are above where current market is at. Now, the reason why I bring this up is because in the Dot's trade room every morning, I talk about where institutional bids and offers are at. See, most institutional traders aren't stepping into the market at the market price. They want the market to come to them, either buying in at a better price when the price dips down to a level, or selling at a higher price, getting in at a better price up above and looking for the price to go back down. That's the process that most institutional traders trade. Now, where does this come in when you trade with Dots? Because I find it's really fascinating when you sit and look at the institutional bids and offers in the market and you compare it with the Dots levels. Now, what I'm going to do in today's video is I'm going to show you the current Dots levels for the Australian session and compare it to the institutional bids and offers currently in the marketplace. Now, take for instance, we're looking at the Euro-Dollar 30-minute chart. Right now, the Euro-Dollar about 10.20 to 10.25. This is an area where institutional traders are looking to sell. So my thought is this: if we bounce around a little bit right here and start making a move up, then I can potentially trade this up and trade up to the buy target number 1. Maybe it might push up to buy target number 2, but I know that institutional offers are sitting right in this area. So when I go down to my 15-minute chart, I can see we have a nice trendy move based upon the guppies here. Look for a little pullback here, a little test of the open of the Asian session, and then a bounce on up to that level. A nice little 20 to 25 pip trade there is waiting to be taken. Now, take a look at another currency that we have. This evening, we got a lot of news out of Japan coming out. Now, when you look at the dollar yen, you can see very simply there is a double top, actually a declining double top pattern, even though the trend on the hourly is kind of turned to the upside. So what I'm thinking about is this. We have the Japanese CPI and the Tokyo CPI coming out. We also have the BOJ coming out, and the BOJ is talking about potentially easing. Now, if they don't do easing, we may see some strength in the yen, and that could cause the yen to drop down and maybe make a push down to test this floor. Right in this area is the last amount of support in the marketplace. So here's my thought. The BOJ comes out, no easing, the possibility of strength in the yen. And guess what? We're sitting right now at a sell entry level. If the market pushes down, I can look for the sell target number 1, sell target number 2. If it pushes on down, the possibility of coming into this area actually below the previous low. Now, there are currently bids in the market at 120.50. So here are my thoughts. Let's see if this guy trades down to 120.50, holds in above this low support area, and then we possibly get a bounce. There's some thoughts right there going into the Asian session, going into the BOJ announcement later. Now, also tonight we have the business confidence numbers coming out of New Zealand. So we're going to take a look at the Kiwi dollar, and here we are on an hourly chart on the Kiwi dollar. We've seen that the RBNZ elected to keep rates unchanged. That caused a little bit of a push up in the Kiwi. But notice this, it's coming up into my long-term guppies here. There's a possibility here that if the long-term guppies hold, we'll see a bounce back down. Now, if the confidence number comes out less than expected, then guess what? We are set for a fall back down and a test of these lows right in here, right near the sell target number 2. Now get this. Currently, right now in the market, as I'm doing this video, the offers in the market where institutional sellers are looking to step in is sitting at 67 to 67.20 area. Right in this area. So we could get a little pop up, and right in this area, you can see where the previous high was during the US session. A little pop up, runs into some offers up here, so I can literally trade this up as it pushes to the upside, come down to my 15-minute chart. You can see on the 15-minute chart it's trying to push up, We actually have a wedge pattern right here. If it pushes through, then I'll look to see if it pushes on up into this area where we have institutional offers. Those offers come in line. If that business confidence number is worse than expected, down we go. And I'll trade it from level to level to level. Now last but not least, let me talk about one more that we have here is the Aussie dollar. Now if you go out to the hourly chart, we've seen that Aussie dollar just down, 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 down. Not looking too strong here. Today it made a little bit of a move back up to test close to 71, but couldn't do it. So here's some thoughts. Currently, right now in the marketplace, as I look at this on my 15-minute chart, take a look at the DOTS levels. The DOTS levels here are coming up to the buy target number 2 level is sitting at 71. Currently in the market, at the time of this video, we have offers sitting between 71 to 71.20. Right in this area is where the offers are at. The bids, on the other hand, where the institutional traders are looking to come in, those bids are sitting down at 66.20. They're way down much lower. So here's my thought. The market could kick up a little bit if that New Zealand business confidence number comes in better than expected. Maybe if something out of the BOJ is a little bit better than expected. Okay, we might see a little punch up, but then overall, given the hourly direction of the market, my thoughts are this, is we may push up, come back over, may test lower, but if it doesn't test lower, I'm going to be looking for a double bottom, but I can literally trade from level to level to level. That's how I put dots with what I receive from the institutions, what their bids and what their offers are at. Just remember this, institutional traders are looking for a better price constantly. Whether that better price is to sell into the market at a higher level or buy into a market at a lower level. We see this happening all the time in the market. So the next time you look to trade, whether you have dots or you don't have dots, consider where the institutional traders may be at. If you don't have that news available to you, then look for areas where you have repeated highs and repeated lows. Let's go take a look at the pound dollar. If you take a look at the pound dollar in this hourly chart, you can see that we have these highs up here. The possibility is the market will push up into these highs. Once it pushes up into those highs and it can't seem to go any higher, we probably are going to run into a set of offers here that's going to test this resistance. Take a look at the pound right now, just food for thought. Offers in the market right now are sitting at about 53.20 to 53.40. They're sitting right in this area, right where it attempted to go higher before and couldn't do it. And the bids on the pound right now are sitting down at 52.70 to 52.50 area. Oh, look at that. Right down at my sell target number 1 and my sell target number 2. So with all that in mind, if we get continuation to the upside, I know where the institutional traders are sitting at. Most likely, nice little look right here. If we get some momentum to the upside, I can trade this up, knowing where those offers are sitting at, being ready to possibly come out at the level, near one of these levels here, being ready to come out of the trade, and then knowing that the possibility is that when the market gets up there, offers are going to come in, driving the market lower, and where to? Back down to where some bids are sitting to buy it back up. Put the information together, use the dots levels to enter and exit the market along with where the institutions are playing, and you most likely will have yourself some very good trades. Well, this is Dean Malone with CompasFX. Hope some of this information will help you in your trading. Y'all make it a great day, get some good trades, and we'll talk to you next time. Bye-bye.